Welcome to the Airmere Roundtable. Today is the 31st of May, 2022, and we have a special guest, Amy Meissner, with us. Amy is a longtime friend. We've known each other for many years. She's produced many interesting trading systems and classes and workshops, and today she's been working on a new one for high volatility markets like we've all been experiencing the last several months. So it's a pleasure, Amy, to have you, and we look forward to it. But before we get too far into it, just a normal disclaimer that Airmere and Amy Meissner are not broker-dealers or investment advisors. It's for educational purposes only. Options involve risks and are not suitable for all investors. Past performance is not indicative of future results. If you want to read the whole disclaimer, go to the bottom of any of our web pages or pause the recording. So with that, Amy, I'll mute myself just so there's no background noise, but I'll be here to answer questions and help you out.
Okay, sounds great. Thanks, Tom. And thank you, everyone, for attending the roundtable today, for those that can attend live. And thanks for tuning in if you're watching this after the recording. I know Tom gets the recordings up pretty quickly, so hopefully you get a chance to watch it recorded if you can't watch it live. So as you all know, we've been experiencing a lot more volatility lately with the markets. It's starting to trend down, certainly looking a lot more bearish lately, so to speak. And it's been a long time since we've had this type of market for any length of time anyway. I mean, it's still pretty early stages, but even though that might feel really scary for a lot of you, it actually provides some really great trading opportunities that we may not have seen in a lot of abundance in a while. So today I'm going to be talking about a trading system that allows us to basically take advantage of that. So for today's presentation, I'm going to go over high volatility in today's market, trading the market you have. The HV7, that's what we decided to call it, the HV7 trading system, which is what I've developed for this. It's basically a trading signal combined with a short-term weekly option strategy. And then I'm going to go over the 10-year performance over the last 10 years. It goes all the way through the end of this month, and statistics. And then talk about this new workshop that I'm going to be teaching starting next week. That's going to show you how to trade this new option trading system as well. So before we dive in too much, I just want to talk a little bit about me for those of you who may not know me. My name is Amy Meissner. I began trading stocks and options in 1995 in the 90s, and I became a full-time option trader in about 2006. I specialize in high probability option strategies. My main goal has been to create a monthly income and consistent returns during a variety of market environments, so whatever the market's doing. I tend to create strategies that don't require me to sit in front of my computer all day. I don't want to be a day trader, and I live out here in Southern California, so I tend to want to spend, as much time as possible outdoors, enjoying the lifestyle that we have here. So I've done speaking engagements and presentations for numerous trading clubs and educational trading services. Of course, here at Airmere, quite a bit of stuff here at Airmere. And I've had multiple trade alert services, workshops, and video courses, including the latest one here at Airmere, which is the A14, which a lot of you have been trading and really enjoy. The asymmetrical iron condor, or the AIC for short, the 14-day version of that, the nested iron condor, and the time zone are all services and video courses that I have at SMB. There's still video courses, and I'll do services occasionally here at Airmere for those as well. Right now at Airmere, I have, like I said, the A14, which is available. It also was a workshop, but it was all recorded and really great trades. So if you haven't checked it out, you might want to check that out. All right, so let's dive into this. Now let's take a look. Back at this last bull market we've had over the last 13 years. And I just do want to mention that even though we've continued to have an uptrending bull market for those last 13 years, there were some decent corrections as well. Obviously, the most notable would have been that March 2020 crash because of COVID. That was definitely extremely dramatic and nothing like we'd ever seen before, even though it was super short. I mean, it really only lasted, it was just under 30 days that it lasted, but we had multiple limit down days. Some of the days were down 10% or more. It was, certainly dramatic to say the least. So, but then again, we also recovered almost as quickly because of all that unprecedented and extremely fast response from the Fed, all that money being pumped in immediately really was able to turn that around very quickly. right? As opposed to a lot of bear markets that last longer, that cause more problems down the way. And then of course they take a lot longer to recover from. So let's take a look at today's market. It's definitely starting to look a lot different, right? Since the beginning of the year in 2022, we've basically been just kind of headed in a downward trending trajectory. It certainly has a much different feel. Instead of buying every dip, we're now selling every rally. Today is a good, indication of that. Every time we think we're, starting to, buy a dip, it starts to fade pretty quickly. So, but basically the Fed has finally begun a tightening cycle, that basically we've all been, kind of watching and waiting for. And so now that money is coming out of the market, the Fed's not supporting as much. There's, the Fed put, so to speak, is not really there to catch every fall. It's not in place, right? So it's time basically for things to rebalance. Usually everything, is going to be way overdone. It's typical of these types of markets. And of course, that's where the high volatility comes into play. We have these big moves in both directions. It's not just the downside moves, but those sharp and often violent reversals up like we had last week that kind of feel like, oh, the selling's over. And then all of a sudden they get sold off as well. So, and we've been seeing a lot of that lately. And that's something that we haven't had over the last 13 years. Every dip has been bought, and they've usually been very shallow dips, most of them. So now it's, kind of looking a little different. And this is basically what a bear market kind of looks like, right? So that's basically what we're going to be talking about today. If we continue to have more volatility in the market, or, even if we don't, there's always going to be times when we have volatility in the market, whether it turns into a full-blown longer-term bear market or not. This system that I created, the HV7 trading system, can take advantage of those more volatile times and give us an extra strategy to trade if we don't feel like trading some of the other strategies that we might have that might not, deal with these types of moves as well. We've still had a number of opportunities even in the last 13 years of the bull market. There's still plenty of opportunities there, but now we're definitely starting to see a lot more of those opportunities that we can take advantage of. So that's what I want to, do with this system. So what is it, right? What is the HV7 option trading system? So basically it targets specific high volatility events as a signal to enter a trade. So there's certain things that have to happen in the market to signal when to enter a trade. And then when that signal, gets hit, it's combined with a very short-term option strategy setup that uses the weeklies to take advantage of these quick, of the quick theta decay. The higher volatility allows us to be in the market a lot less, because we have, we get a little bit more room to run around when, in the weeklies and short-term weeklies when we have higher volatility. So it sets up a nice quick profit potential with some good range. The strategy is set up specifically to take advantage of when the volatility hits. And it's also able to handle these large swings that we typically see in these markets. One of the other nice things about it is there's no adjustment. So this is a no touch position. Once it's on, it's just, you put in a profit, good to cancel order, and you don't have to worry about adjustments or watching your screen all day long. And it's got a really high win rate, which is of course what we want to see with these. Of course, that's why we're narrowing it down with a signal. We don't want to be putting it on all the time, but there's going to be certain events where it makes sense to put it on, and that's what that signal is going to trigger, right? And there's, like I said, there's been quite a few of them in the last few years. Since 2020, there's been quite a few. Not as many in like 2013. I don't think there were any in 2013, but even in during the bull market, even during those years where we had low volatility, occasionally there are going to be events that pop up, these higher volatility events that give you opportunity to take advantage of this strategy as well. But I think we're going to be, we've had quite a few opportunities, like I said, since 2020, and I think we're going to continue to have that for a while. So it seems like it's a good time to really add this to, your trading toolkit kind of thing. I went back 10 years, all the way to April 2012. I'd go back further. Like I'd love to go back to the bear markets of 2008 and 7 and 8 and the dot-com bubble, but unfortunately, with the back testing tools that we have, like Option Net Explorer, I think it only goes back to 2010, and at that point, it's all end of day data. So in order to make this realistic, I'm only going to go back as far as the data lets me, that the real data lets me. And also, you got to remember, weeklies weren't like a big thing way back. Too far. 2012 it's okay, but going back too far, we didn't really have those weeklies. So it's more of a strategy that is kind of allowed to come about because of the weeklies that we've had for quite a while now. We've got plenty of liquidity in the weeklies. So like I said, this is a 10-year testing. So I went back and I did 10 years of results all the way back from April 2012 through the end of May. So everything up to a signal that I got last week. And so the combination of this entry signal trigger plus the no touch option strategy has produced 100% winners of the 2022 trade setup. So all of 2022, all of the trade setups that were triggered in 2022 have been winning trades, which is pretty amazing. And then if I go back for the whole 10 years, since April 2012, it's produced a 93% win rate, which is also pretty substantially high. So it's definitely, setting, when this thing triggers, it's got a pretty high likelihood that you're going to make a profit. The trade is only entered when the signal is triggered. And like I said, there's been quite a few opportunities already. Very short term, the average days in the trade is only 2. Again, it's a no touch trade, which means there's no adjustments to worry about in this one. And that's just a repeat of the win rate, 93% over the last 10 years, 100% so far for 2022. Some benefits are that it's a very simple setup. It's a single order at order entry. So you don't have like a whole bunch of combination of spreads. You just have one order to enter. There's, in addition, there's a basic entry, which has a formula to it. And there's also a low margin entry for people that want to even have maybe smaller accounts or want to trade even smaller. There is a low margin entry option as well. We already said no adjustments needed. Sorry for the repeat there. We use good till cancel orders to exit. So again, there's no need to watch all day. The average days in the trade is 2. And this trade the position is put on in the SPX options, which are of course highly liquid and have favorable tax benefits. At least as of this, presentation, the tax benefits are still favorable. I don't see them ending anytime soon, but of course, you always want to check with your CPA on that. It can also be used in the RUT index options as well, but all of the examples and all of the performance testing that I've done have been in the SPX, not the examples. Just that 10-year test was all SPX index options. As far as capital and profit targets, standard entry, the planned capital is $5,000, so like a $5,000 account, and that's for a single lot trade. So what I mean is like this is actually made up of a broken wing butterfly, which is made up of one long, 2 shorts in the middle, and 1 long down below kind of thing. And so just one of those. Average margin for one of these standard entries is only $2,800 for that single lot. The low margin entry, so in low margin version, the planned capital is only $1,500 for a single lot, and the average margin is about $1,200. And the profit target is 5% of margin. So that seems to be a target that's pretty easily attainable, even with some wide swings, as opposed to, there you can stay in longer and get much higher profit targets. But the test was done with just a very quick, usually within 2 days was the average profit target of 5% getting hit. So a typical position would look something like this. It's a specific butterfly formula that I'm using. This position on here is just kind of showing what happened after 3 days in the trade during a 3.6% drop in the market in the SPX. I probably would have been out way before then, but this one, if I would have stayed in, I could have made more money, but I would have been out earlier. The specific setup allows for large market swings, as you can see here, 3.6%, probably back and forth, quick profit potential, and an easy entry and exit. And some statistics from that 10-year performance or test that I did. As you can see here, this is from April 2012 through May 2022. This is just a single lot trade with an average of $2,800 margin per trade. You can see that there's probably not much going on in 2013 or 2014, but even, during the lower volatility of 2015, 16, 17, there's still activity. There is still, signals happening, but starting in 2020 is when we really started getting a lot more signals all the way through to today. So this is showing that, during that period, there were a total of 91 trade opportunities. And out of those, 85 were winners, 6 were losers. So that's a 93% win rate over that time. So that's a pretty substantial amount of winners over losers. Average days in the trade was, about 2. And, the losses, there are going to be some losses, but they're usually not too bad. But again, it's a no-touch trade, so there are some things that we do with the good till cancel order, and just the nature of the way the market moves is why these usually turn out to be profitable. So because you got a lot of swing that the market can do, whether it's up or down, and usually with that short time period, you'll end up with your order triggered, profit target triggered before anything gets too wild. So Tom, are you there? Should I answer some questions now, or should I just go through the workshop and what I'm going to include, or what do you think? You want me to wait till the end to answer questions?
Yeah, I'd probably go to the end and then do questions.
Okay. All right. So that's what I'm, so that's basically what I've been doing. So I'm going to be offering this workshop starting next week. It starts on Monday. So it's going to be a couple classes. It's very specific. So I'm just going to, give you all the information that you need, and probably 2, maybe 3 classes if we need to go that long. It'll be obviously, probably at least a 2-hour days, at least, maybe a little bit longer for each class. Then basically what's going to be included is the signal, the entry signal for the HV7, what's the criteria, how to set alerts so you know exactly when to enter a trade, everything you need to know about, what triggers this trade entry signal and how to set it up. How to set up the actual trade position, and step by step. I'll include additional setup for the lower margin version, and I'm going to cover, what's the difference and benefits of each of those versions, right? And go over the formula, so that you always know how to set this up. So it's pretty simple, but it is a specific formula. I'm going to talk about exactly when and how to exit the trade, including the use of the good till cancel orders, which makes things as easy as possible. You can use some alerts in there as well. I'm going to show examples of multiple trades throughout the extensive 10-year backtest that I did. Again, there's no adjustment, but I am going to go through so you can kind of see how, each one of them performed. So I'll grab a bunch of those and we'll go through step by step, each one of those. I'm going to do some bonus example trades using the lower margin version, not just the setup, but I'll also show some trades that went through with the lower margin versions. You can see the differences, and some trades using the RUT index as well. I'm also going to give you a complete trade log from OptionNet Explorer of the 10-year backtest that I did, which is the April 2012 through May 2022. Again, this is going to be, it's just done in the SPX, and it's for the standard, not the low margin, but the standard version of the setup, which, but you'll learn how to change that to a low margin version with the, with the instructions that I'll be teaching you as well. So there's also a private forum for students. So if you sign up, you get a private forum that you guys can access to interact with each other. All the classes are going to be recorded live, so you can join us live, and it's going to include time for Q&A, so I can answer your questions during that time, but they'll also be recorded if you can't be there live. I'm going to do a bonus. As a bonus, I'm going to do an additional live Q&A session that's going to be scheduled sometime between 30 and 60 days after the original live classes, so that way it gives you guys time to kind of play around with it, come up with some additional questions. Maybe there's some students that didn't sign up in time for the live classes, or maybe you couldn't attend the live ones and you're just watching the recordings with other people's questions answered. You want to ask your own questions as well. So this will give you a chance to get your questions answered as well. And it's not just if you're there live, even if you're not there live, you can still send questions in ahead of time, and I'll cover those as well during the session so that those are recorded as well. And of course, all of these classes and bonus sessions will be recorded and available for playback. So if you sign up, you can always go back and keep rewatching these things. So basically, again, this class is going to start on June 6th, which is next Monday. So a little less than a week from now, after the market closes. In order to sign up, you would just go to aramir.com/HV7. That's the link. And for a limited time, it's just going to be one payment of $247. So pretty simple, very specific, give you all the information, and we think a really good price. So hope you guys are interested. I think it's something, like I said, I think it's something really good to have in your toolbox. It's a nice signal that can be used probably with other trades as well. So you get the signal and you get the strategy kind of combined into one. That is probably going to come in handy, over for a while during this times that we're going through with the market. I think we're going to have plenty of signals probably going forward. There's no guarantee, of course, but I can't imagine that, just all of a sudden everything's going back down to low volatility. All of a sudden, it seems like, when the Fed starts tightening its monetary policy, it takes a little time to go through that. So it's definitely going to be caused. And then we've got all sorts of other stuff going on in the world, like the war in Russia and Ukraine, and oil prices being crazy, inflation out of control. It's going to take time to get that back in line. There's the possible housing bubble. There's all sorts of things that can cause some havoc in the market. So why not have something that can kind of help with that, right? So with that, let me go through and answer some questions. So I'll go back a little ways here.
There's quite a few here.
Yeah, okay, I'm gonna
see, we probably zip through the O&E ones.
Okay, so one has a new beta version coming out. Oh, I didn't know that one has a new beta version, but let's see. Okay. All right, I'm still looking through. Okay, here we go. HV7, cool name. Yay, we were struggling with that one. We couldn't figure out something, but Tom came up with that. Thanks, Tom.
Yeah.
I think it's pretty cool.
It's easy to remember.
The letters and the numbers, right?
Yep. It's like the Autobahn, right?
Yeah. Still stuck with Warren. I subscribe your 14-day BW, which one's compared to the, okay, so it's total. So the A14 broken wing butter strategy is one that you can put on like every week. So it's not specifically tied to a trigger. It has its own specific set of rules, and there's adjustments that you need to be making and so forth with that one. It's a great trade. People have been doing really well with it. I keep hearing people, talking about it. And as long as what I found is that most people that kind of stick with the basic rule set without changing that too much have done the best, and it's kept them out of trouble. People that are trying to maybe over adjust a little bit are finding, maybe they struggle, but they're, making too many changes, right? But if you stick with the basic set of rules for the A14 that I laid out in the workshop for the A14, people have been doing really, really great with that. And my trading for broken wing butter, short-term broken wing butterflies, which is a little more nuanced version of that, has been going really well as well. So I'm continuing to enjoy it, especially, in these volatile markets. But it does have adjustments. The difference for this one, the HV7, there's no adjustments. It's only if there's a trigger, the trigger is going to be there to allow you to kind of feel like, okay, well, if it's triggering, this is probably the best time to put this on, or this is it's triggering because this is the best time to put this particular formula of a broken wing butterfly on, and there's no adjustments necessary. It's just put it on because the trigger hit. There's specific timing and everything of what to put on and how to put it on, and of course that's going through in the course, but there's no adjustments. So it's different, and of course it's not going to be something you want to put on every week. It's only you're going to put it on when you get a trigger. Of course, lately we're getting a lot of triggers, but when there's lower volatility market, you won't get so many triggers. And that's when, that's like most of my other strategies, you just put them on like either every week or every month. It doesn't matter. They all have adjustment rules. This is different because it doesn't have the adjustments. It's just, you only put it on when the trigger hits. So it's just a different tool in your toolbox, right? So I'm going to go over all, how I'm determining what, the volatilities and what levels of things are going to trigger the strategy. All of that's going to be gone over in the workshop, exactly what needs to be triggered in order for the, or hit in order for this to be triggered. What am I looking at, and how to set up the alert so that when a trigger to trade the HV7 is hit. What is different about 2022 that makes it 100% win rate versus 93% overall? Well, 93% was over 10 years. As you can see, there was 91 total trades. 85 of those 91 were winning trades. There's only 6 losing trades. So even though it's a very small number, it knocks it down to 93%. So I don't think there was any, big difference in 2022 other than, we just haven't had a losing trade yet. But even if you just hit one losing trade, it knocks down your percentage a little tiny bit, right? So, but the market is just the trigger makes it favorable to enter into that kind of trade. So, can SPY be used instead of the SPX? I haven't traded it in the SPY. I would just worry about. Well, I guess if you're just doing one contract, the only thing is you're just not getting a lot of premium. So in order to make up for that, you have to do multiple contracts, and then you have commissions. You don't have as favorable of a tax, it's not as favorable tax-wise. So I think that I prefer the indices, but I don't, I don't trade it in the SPY. I prefer the indices. Just mainly because of commissions and just not getting enough premium in the SPY. Not that it can't be done. It's just, I think some people trade using systems where they're only paying like a monthly fee instead of commissions, and then it makes more sense to trade multiple contracts in the SPY or the IWM, that kind of thing. 5% of 2,800. Yeah, so it would be whatever the max margin is for that trade, and since the average is 2,800. It would be 5% of whatever that particular position is, but 2,800 is the average. So average 9 trades per year. Well, in the 10-year period, I guess, yes. Yeah. So far in 2022, we've had 18 signals or 18 trade setups. Are you using bid price as execution? Yeah, I always look at the mid price. There may be slippage, of course, but I'm always using the mid price as execution for testing. So yeah, there's always going to be a little slippage. I do include commissions of $1 per contract, both on the opening and the closing, and there's always closing for all of my testing. So that does include commissions. So this is a back test. Actually, I did trade a couple of these, and I trade broken wing butterflies all the time in the SPX, and I did trade a couple of signals that hit. As I went back and made sure that this was something that was going to be suitable, and then in May we got hit with a few signals, so I went ahead and threw some on and made a little made my profit targets on those. So yes, but I didn't go all the way back to 2022 because I was still in the testing stage. Will the class information be available long-term for reference on Aramer? Yes, everything is recorded, and anything that's included in the class, the trade log, the recordings of the classes, all that stuff will be available. So anybody who signs up, you'll have access to it as long as Tom leaves it up there in the archive. The specific signals are going to be taught in the workshop, so I'll show you exactly what it's made up of. But we've had, like I said, 18 trade opportunities in 2022 so far, so there's been quite a few, which answers Meryl's question. There's going to be at least 2 classes, probably 2 to 3 hours each. That should give enough time to go over everything that you need, plus a Q&A session. If I need more, I'll add a class. But because there's no adjustments, we're not really having to go through, like, if this happens, here's a bunch of different adjustments that you could do. Sorry, my dog is really nibbling on this bone very loudly in the background, but it keeps him quiet. So there will be, a couple of classes, as many classes as needed to get through all of the information. So there's a lot of information, but it's not, like I said, there's no adjustments, so we don't need to go over all the different types of adjustment strategies that there are, right? So that kind of cuts down in how much class time. So it's very specific. You'll get exactly what to do, when to do it, how to do it, how to exit, right? And the signal be automated. It really depends on, what you're using as automation. So I'm sure that there's programs out there that can figure out how to, enter the formula in and have it trade automatically. I do not know how to do that. So I couldn't tell you for sure which program or what would be able to do that. Did you switch from the A17 to, you mean the A14 to this trade, or? No, I didn't switch. This is, like I said, this is just something like an additional trade to have in your toolbox. You have, and it's based on a signal. So the A14 is something I can do every week. This one is, something that, if I hit the signal, I can throw this thing on and put in a good till cancel order, and 93% of the time I should hit my profit target and get out, right? So it's just an additional trade that can be traded during this time. So maybe you're trading strategies that don't do well in high volatility markets. This is great because now you have something that, when the volatility is higher and I want to maybe not trade as many of the strategies that I'm trading, maybe I only want to do this one or that one, or hold back for a little while. Here's something that you can do that'll get triggered during these more high volatility times. Please put the link here. Can you put the link in, Tom?
I just did.
Oh, okay. I'm still scrolling.
It's really easy. It's aramir.com/HV7.
Okay, I'm listening in from far north Queensland, Australia. Welcome. That's awesome. We'll be attending the workshop. Is the time to start? The workshop will start at 16:30, which is 4:30 Eastern time on Monday.
It's recorded because that's like the middle of the night.
Oh, I'm sorry. But yeah, but it's recorded. So if you're going to do it, and let's say you have some questions already, you'll be able to submit me questions. And that way, if you won't able to attend the class live, I'll still can answer your questions during the live recording, and then you can rewatch it, after the report. Usually Tom gets those up by the next day. And then again, we're going to do another Q&A session, 30 to 60 days out. So that'll give you some more time to ask more questions, right? I trade the A14 weekly. So is HV7 a complementary strategy, or both? Yeah, it's a complementary strategy. So sometimes, you might get a signal, you might be putting on an A14 on Friday, but you might get a signal for this on a Monday or a Tuesday or a Wednesday, right? Or a Thursday or a Friday, it's just, and you can put it on. And I'll show you how to put it on in the RUT in case for people that like to trade the Russell 2000 as well.
Well, if the market's quiet, the HV7 won't have any trades for potentially quite a while.
I'm sorry, what?
If the market's quiet, like 2013, you might not have an HV7
we're
for
probably it's going to take a while before the market quiets down like that. Right?
Oh, absolutely. Yeah,
I just don't. I see that now.
We're volatile.
We've been basically getting a lot of signals since 2020. So I think that's probably going to continue for at least through the end of the year. So, it's certainly worth having. I think
maybe longer. Yeah.
Right, exactly. And like I said, even during the 13-year bull market, there were still signals. There were still times of the signals got triggered because of volatility picked up, and certain things were happening in the market that said now is a time. I think I already answered how many triggers in 2022 so far. 18.
I think that's when a latest beta.
Trade exactly as you're going to teach it. Yes, I did that. I traded it exactly as I'm going to teach it. There's no difference, and you'll get the one trade log. And since there's no adjustments, you'll see exactly, exactly what it was. And one is pretty good. They have real data coming in every 5 minutes. It's not perfect, but you can see if something's like a realistic trade and what's not. So we're going to talk about all of that during the workshop as well.
And the next question from Rainer, I'll put the Zoom recording on as soon as I can in the library, but it takes a little while to produce the YouTube version. So I'll get the YouTube or the Zoom one on fairly fast.
And that'll go in the
In the
round table, right?
library.
Yeah,
In the library.
And then
Yep.
the YouTube version will go up, what, like another day or two after that?
Well, yeah, probably within 6 to 18 hours afterwards.
Oh, okay, good. I was going to say, if we're starting this class on Monday, we probably want to get it out there pretty quick.
Oh no, it won't be like a week. So.
Yeah. I don't really do one-on-one training, Christos. You know, every once in a while, maybe I think about it, but I'm just so busy with other stuff. But you know, you certainly can ask questions, and the private forums are really helpful for any of the, like my workshops, like the A14 has a private forum, and everybody kind of helps out. And then every once in a while I'll go in there and check what's going on as well. But you know, during the class, you can ask me, you know, send me questions, and I'm pretty good about answering them. But at this point, I'm not doing any coaching.
The trade.
Good question. Is the max potential risk 100% of margin? Well, not really, because there is an exit strategy as well, Jesus. So, you know, if something happens, you can exit the trade before you would hit a 100% loss or whatever. So there is a trigger for that as well. But it's not something you have to like sit in front of your computer the whole time. You just check it like once a day or something. So here we go. Tradier has 0 commissions for SPY for those who want to trade the SPY. I did not explore this on the NASDAQ or the NQ futures. I probably have a completely different signal, because that's just, you know, moves very differently than the SPX or the RUT. Can there be multiple HV7 trades on at the same time? That's a good question. There are occasions where you can put 2 of them on at the same time, different cycles. And that happens occasionally. Yeah, there are some conditions to exit before you get too much of a loss. And then I'm going to go over that in the workshop as well. That's for JAM. Is there a signal? There would only be 1 signal per day. So if the signal is hit during that day, that would be it for, you know, whether it's going to allow you to do 2 trades or 1 trade, doesn't matter. If you hit the signal, you're not going to
is the signal at a specific time in the day?
No, actually, if the signal happens, as long as you hit the trigger sometime during the day, the trade doesn't need to go on until later in the day.
Okay, so it's not like an immediate thing you have to put on.
No, it does not immediate. So it's not like, oh my God, I got to scramble to my computer. You got plenty of time. Well, you know, as long as you're at some point sitting in your computer.
Don't do it like 2 days from now. Yeah.
No, it'll happen that day, but you don't need to do it right away. Okay, you can set an alarm for the signal. Yes, you can. And that's what I'm going to be showing you in the workshop. So you'll know exactly how to set it up so that you know when a signal is triggered. You'll be able to set it up, you know, in most platforms like Thinkorswim or Tastyworks or Interactive Brokers. You should be, yeah, you'll be able to, you know, as long as you have a trading platform that allows for alerts, you should be able to set those alerts, and I'll show you how to do that so that you know when the signal is triggered. Yeah, 5% on margin net of commissions. Yeah, because when I'm in one, I usually set my setup so that it shows. I set up my configuration so it shows round trip commissions. And all of these tests, I do $1 per contract on both the opening and closing. So it's already taking into effect the commissions. And I'm kind of looking at the percentage on margin after the commissions are taken out. So yeah. Would you recommend using Tasty or TOS for the strategy? Either one. You know, just try to negotiate because if you're doing it on the SPX, just try to negotiate your the fees that they charge you for trading the SPX. So not just your commissions, but those fees, so, you know, which is typical these days. Do I need an option analytics software for the HV7? TOS is sufficient. I don't know how to use the one in IB, but I know if it has some kind of analysis in there. But you really shouldn't have to, you don't have to use one. There's no adjustments. I like using it for everything because it just kind of keeps everything nice and tidy. But there's no adjustments in this. So the formula to put on a trade can be done in your platform. You don't have to look at it in a graphical way if you don't want to. When the second class is going to be taking place the next day. So it's going to be Monday and then Tuesday. So, and then if I need a third class, I will, I think that's the way we have it scheduled right now, right? So it's Monday, it's the first class.
Yeah, the 6th and the 7th.
Second class is on Tuesday, so you get all the information ready to go. And then if I need a third day, I will add one. And then of course that additional Q&A session 30 to 60 days out, and I'll of course let you guys know when that's scheduled. We cover risk management, such as what percentage of total account would you do a one-time trade? Well, there's no risk management as far as adjustments, but there is risk management as far as if certain things happen in the life of the trade that you're going to want to take into account and close out the trade. But as far as what percentage of your specific total account to use, that's something that I'm not really allowed to recommend because I'm not an advisor. So that's just something that just legally I'm not allowed to recommend anything specifically of what you should use of your particular account. So that's going to be up to you and your financial advisor. Not putting on 2-day butterflies on the SPX. No, that's not what they are. I do talk about loss exits. The winter trades, no, I don't usually trade until most of the time they are off way before expiration. Although there's not very many days, there's not very many, it's a pretty, quick DTE, but usually they're off like before, expiration for sure. I don't trust, getting into expiration because then you just have the gamma risk. What is your trading performance over the last 5 years?
That's a tough one to answer.
Yeah, I've been trading a lot of different strategies over the last 5 years, but since my personal performance over the last, 2.5 years has been mostly with the broken wing butterflies, my particular version of it. And, I tripled my account the year before. Wait, where are we in? When did I do that presentation? Like as of December of 2021. No, December of 2020.
No, 2021, last December.
2021. Yeah, for those 15 months prior to that, I tripled my account. And I'm kind of on track to hopefully about do the same this year. So we'll see. You don't have to have one. Okay, so we answered that. Does the signal apply to different underlyings or specifically? It's specifically for the SPX, but I'm going to show you how to do it in the RUT as well. Fidelity, no extra. Oh, Fidelity has no extra fee to trade the SPX. That's interesting. You can see Airmish coaching options here. And then.
Yeah, but Amy doesn't do coaching. So, but
Yeah.
Steve does.
Oh, okay. And then Aeromere, I didn't see that .com/HV7. There's the, how come that didn't work? HTTPS? I don't know how to do it.
Oh, you just sent it to host and panelists.
HTTPS://.
There we go.
There you go. Thank you. I appreciate that. So there's the link to sign up. And again, first class is on Monday. You sure we shouldn't maybe put it out a little bit longer to give people time? But I don't know. It's just, it works with my schedule, so I think it should be fine. And I'll give you an opportunity to ask questions ahead of time if you sign up, so that for some reason, if you can't watch live, you can still have your questions answered during the class. Still working on the welcome screen, but we're getting there. So it's almost done. Any other questions? I don't see any other questions. I think I answered everything.
I think so. And ironically, we're just about right at an hour.
Awesome. Perfect.
Let's see, John, how many sessions are there? There's two classes scheduled, and
there's 2 classes scheduled, but I'll go longer if I need to. So I mean, they're not going to be like one, we'll probably have like, each class will probably be at least 2 hours. So, or maybe a little longer. So I'm just trying to get like it's very specific information. So I don't want to, just like little piecemeal it. It's like, hey, let's dive into this. And since there's no adjustments, we don't have to go through all of those different adjustment options. What do you do in a down market? What do you do in an up market? What do you do in a choppy market? So it's a lot, that takes a lot of time. So that's why, there's no need for all of that. So you have less need for classes, but, don't let the, it's only 2 classes fool you. It's a lot of information and it's very specific. So you'll have everything you need to trade it going forward. So, and like I said, if for some reason it takes longer, then I'm going to add another class. So I think that's it.
I think
Thanks
that's
everybody
it.
for joining. I hope to see you in class. And also, if you're A14, hope you guys are doing really well with that. Like I said, I've heard a lot of good results. People are still having really good results with that. I'm having great results with my Broken Wing Butterflies short-term version of those as well. So I'm hoping that everybody else is as well. So anyway, hope to see you in the class for the HV7, and we'll talk to you soon.
Thank you.
Thanks, Tom.